Thank you for joining us this morning, everyone. My name is Rick Kitson. I'm with the Cupertino Chamber of Commerce. And it's my pleasure this morning, well, it's still morning here, to have our presenter today, Michael Bryant, and his team from Wheeler Accountants to talk about all the questions that so many of us have regarding the PPP process and the forgiveness process. So getting right down to business, I'd like to hand the meeting over to Sandy, who will introduce the team from Wheeler Accountants. Sandy, can you hear me?
Yes, I can hear you.
Great.
Hopefully everyone can hear me. Okay, well, thank you, Rick, and hello, everyone, and welcome to today's webinar, the Paycheck Protection Program, Loan Forgiveness. As some of you may remember, back in April, we actually held a webinar to discuss the two loans, the PPP loan and the Ideal loan. Today, we're actually going to cover the loan forgiveness on the PPP loans. Today's webinar is presented by Wheeler Accountants, and this is in collaboration with the Cupertino Chamber of Commerce. I'm waiting for our slides to catch up here as well. There we go. And so I want to say a big thank you to the Cupertino Chamber of Commerce for presenting, promoting, and organizing today's webinar, as this continues to be a hot topic among their members and our clients. So let me take a moment to briefly give a background on who we are. Wheeler Accountants is a full CPA firm providing tax, accounting, and assurance services, and we're located in the Silicon Valley. We serve over 3,000 clients located predominantly in the Bay Area and throughout California. We are a member of an 83-member accounting association called CPA America. We are one of the top 400 firms in the country, and Wheeler Accountants has a large individual tax practice with a focus on high net worth individuals. Our presenter today, Michael Bryant, is the audit partner and has been with Wheeler Accountants since 2009. Michael has a wealth of knowledge in accounting, and his past positions include audit manager at E&Y, controller at Dole, and CFO for an equipment leasing firm. Lastly, there's me. I'm Sandy Martinez-Bulasan, the Senior Audit Manager. My focus is on privately held companies and nonprofit organizations. I've been with Wheeler Accountants since 2017, and my past experience includes working with Bay Area CPA firms over the past 15 years. So today, Michael will go through the background of the Paycheck Protection Program and the loan forgiveness parameters, including the calculation period, qualifying expenses, loan forgiveness reduction, and in conclusion, we'll have time for questions and answers. So definitely type in some questions in the Q&A box below. Now, I'd like to turn over the presentation to Michael. I think
good morning. Hold on one second. Sorry about that. Trying to figure out how to turn on my camera here. Bear with me for 1 second. Okay, so many different platforms that we're working with here, but able to get that camera up. Good morning, and thank you for joining us. As Sandy had mentioned, we're going to talk about the PPP loan forgiveness application and process. There has been significant changes since the PPP loan program was rolled out April 3rd, 2020, and we will continue to see changes. So this presentation has been updated through yesterday with the most current guidance, and just want to let you know that there are still things changing, and we do plan to host another webinar as more information comes out. So as mentioned, April 3rd, 2020, the first round of the PPP loans became available. Those funds ran out very, very quickly. They were gone in about 2 weeks. A second round of funding was approved April 27th, 2020, and there are still some funds available. So if you haven't received your PPP loan yet, or you know somebody that's considering it, we would encourage them to apply. It does end as of June 30th, 2020. So then there will be no more funds available for the PPP loans. On May 15th, 2020, the PPP loan application was released by the SBA. It is 11 pages. It includes instructions and worksheets for the borrower to complete. On May 22nd, 2020, the Treasury released their interim final rule for the PPP loan forgiveness. On June 5th, 2020, the President signed the PPP Flexibility Act, amending some of the various loan and forgiveness rules, which we will be going through. On June 8th, the Treasury and SBA issued a joint statement regarding the enactment of the PPP Flexibility Act. I'm going to start out by talking about the Flexibility Act because these were just signed into law on Friday and will have an impact on the loan forgiveness process. So the Flexibility Act extends the minimum loan maturity date on new loans from 2 to 5 years. The maturity date on PPP loans that existed prior to this being signed into law on June 5th, so that would be most of you. The period is still 2 years, but can be extended by mutual agreement of the lender and the borrower. We'll have to see how this plays out. If you do feel like you're going to have a portion that's not going to be forgiven in your loan, it is probably good to reach out to your lender and see if they will consider extending it from 2 years to 5 years, but it has to be mutual agreement. The original CARES Act gave the SBA and Treasury the ability to select a maturity date up to 10 years. Also, the Flexibility Act extended the covered period from 8 weeks to 24 weeks. Existing borrowers can elect to keep the current 8-week covered period or adopt a 24-week covered period. And we'll talk about more of that as we talk about the forgiveness process. Also, it extends the deadline to cure reductions in the FTE headcounts and salary reductions from June 30th, 2020 to December 31st, 2020, and provides potential exemptions for the reduction in forgiveness due to the headcount. It also increases the maximum amount of the PPP loan proceeds that can be spent on non-payroll costs. This moved from 25% of the loan amount to 40%. For many borrowers, non-payroll costs were a significant part of their covered period expenses, and so therefore this was amended with the Flexibility Act. We do want to note that per the Treasury and the SBA joint statement, if a borrower uses less than 60% of the loan amount for payroll costs during the forgiveness covered period, the borrower will still be eligible for partial loan forgiveness. Before, when we were reviewing the act as it was signed into law on Friday, it seemed to be a cliff that basically there would be no forgiveness if less than 60% of the loan amount was used for payroll costs. So we were happy that the Treasury and the SBA had come out with that joint statement that there would be just a reduction instead of a cliff. Also in the Flexibility Act, it extends the deferral period. So the original deferral period was a fixed 6 months, And now going forward, it will be based on the borrower's final forgiveness decision. And if the borrower is not seeking forgiveness, then that deferral period would be 10 months. So that means that interest and principal payments wouldn't be due for until starting 10 months into the loan period. Also, the Flexibility Act eliminates the prohibition on the payroll tax deferral for PPP borrowers. Thus, the borrowers can take full advantage of the payroll tax deferrals that are provided in the CARES Act without any issues with the loan forgiveness for your PPP loan. So we're going to talk about the covered period and also the alternate payroll covered period. We're going to talk about some qualifying expenses, including payroll costs related to employees and payroll costs related to employers. We're also going to be discussing the non-payroll costs. So the loan forgiveness calculation period. So the covered period is the 8-week period beginning on the date loan proceeds are distributed. We've been getting a lot of questions about, hey, my bank sent me a check. We didn't receive the check right away. So when does my covered period begin? A lot of banks are interpreting that as the point where those proceeds were available. So when they were deposited into your account and were available to be used. We do recommend that you clarify with your bank because the banks will have final determination on that. But that's what we're seeing that most of the interpretations are. This is the default period. The PPP Flexibility Act does increase the covered period to 24 weeks, no later than December 31st, 2020. But we are waiting for further guidance from the SBA to clarify how this extended covered period will be implemented. Also available is an alternate payroll covered period. So this is an 8-week period beginning on the first day of the first pay period following the date of the proceeds are dispersed. This is only for companies with weekly or bi-weekly payroll schedules. So if you pay twice a month, you cannot elect an alternate payroll covered period. This alternate payroll covered period was provided just to actually make bookkeeping a little bit easier. And we will be waiting for some further guidance on how this will be implemented with the 24-week period, whether it's going to be 8 weeks within any of the 24 weeks, that is yet to be seen by the SBA. As a note, the alternate payroll covered period only applies to the calculation of the payroll costs, and it does not apply to non-payroll costs. So for non-payroll costs, you still stick with the covered period. So we'll run through a quick example of the alternate payroll covered period. The borrower's 8-week covered period begins on June 1st and ends on July 26th. They have a bi-weekly payroll schedule, so every other week. The first day of the borrower's first payroll cycle starts in the covered period is June 7th. So the borrower may elect an alternate payroll covered period for payroll costs only, and that would start on June 7th and end 55 days later. So it's a total of 56 days on August 1st. Payroll costs paid during this alternate payroll covered period are eligible for forgiveness. In addition, payroll costs incurred during this alternate payroll covered period are eligible for forgiveness as long as they're paid on or before the first regular payroll date occurring after August 1st. So this was also nice that they included this language. So you do not have to have a special payroll to pay out at the end of your covered period, as long as it is in your regular payroll cycle. The payroll amounts that are incurred will be included for forgiveness. We'll talk about qualifying expenses. So we'll detail out the payroll costs. So for employee payroll costs, this is for employees only. This does not include independent contractors, owner employees, self-employed individuals, or partners. Compensation includes salary and wages, commissions and similar compensation, payment of cash tips, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, and also hazard pay and bonuses. We've gotten a lot of questions about, can I provide extra pay for my workers that are essential and they're coming in, or can I provide them bonuses? And the answer is yes, but you do have to keep in mind the cap of annual salaries over $100,000. So we'll look into that a little bit more through this presentation. Other included payroll costs are health insurance premiums, retirement benefits, and state and local taxes. This does not include federal taxes. And then compensation does not include excess of annual salary above $100,000, which equates for a 56-day period is $15,385 per employee. It does not include any compensation of employees whose principal place of residence is outside the United States. And then qualified sick leave or qualified family leave under the Families First Coronavirus Response Act. That is also not included because those are reimbursed to the businesses on the payroll filing. So no double dipping with the PPP funds. On the employer side for payroll costs, self-employed, and this was actually clarified in the application. So when the SBA released the application, this was clarified guidance. So self-employed individuals is 8/52 of the line 31 of the 2019 Schedule C. So it's regardless of any amounts that are paid or incurred in 2020, and it's capped at $15,385. This is subject to any further guidance that the SBA may release, but based on the current application, that's what is available for self-employed individuals. Employee owners, shareholders of C and S Corps, it's capped at the lesser of $15,385 or 15.385% of the 2019 compensation. This amount of their 2019 employer retirement and healthcare contributions made on their behalf can be included in additional payroll costs as well. And it is regardless of any amounts that have been paid or incurred in 2020. For partners, general partners are capped by the amount of their 2019 net earnings from self-employment, reduced by any claims for Section 179 expenses, unreimbursed partnership expenses, and depletion from oil and gas properties, if that applies to you, multiplied by 0.9235. And again, this is subject to further guidance. Wanted to make special note that no additional forgiveness is provided for retirement or health insurance contributions for self-employed individuals, including Schedule C filers and general partners. These expenses are paid out of the net self-employment income. There has been a lot of discussion about that, and we are hoping that the SBA and Treasury will come out with additional guidance that might include some of those benefits, but we'll have to see. That's still pending. Wanted to introduce the topic of paid and incurred. So in the paid and incurred, in the CARES Act, there was this concept of paid and incurred, and we got a lot more clarification when the Treasury released their interim final rule on the 22nd of May. So payroll costs are incurred on the day they are earned and considered paid on the date the checks are printed or direct deposit is made. So payroll costs incurred but not yet paid in the covered period are still considered for forgiveness as long as they're paid in the next regular payroll cycle. The interim final rule provides that in general, payroll costs paid or incurred during the 8 consecutive weeks, those 56 days in the covered period, are eligible for forgiveness. We are expecting that we'll see further clarification from the SBA and Treasury when they release their guidance on the implementing the Flexibility Act. For non-payroll costs, payroll costs must either be paid during the 8-week covered period or incurred during the 8-week covered period and paid in the next due date. So even if that due date is outside of the 8 weeks. The PPP Flexibility Act does extend the covered period to 24 weeks. However, the guidance is pending on how that will be implemented for non-payroll costs. So some of the non-payroll costs are the mortgage interest. So this is interest on any covered mortgage obligation. The interest part is forgivable, but the principal is not. Covered mortgage obligation is any indebtedness or debt instrument that is incurred in the ordinary course of the business. So any liability of the borrower, a mortgage on real or personal property, and it had to have been incurred before February 15th, 2020. And the banks are going to want to see that documentation. So sign loan agreements executed before February 15th, 2020. This is based on the forgiveness application, the following is going to be forgivable. So any mortgage interest owed in arrears and paid during the covered period, any mortgage interest incurred and paid within the covered period, and then any mortgage interest incurred during the covered period and paid in the next normal cycle. Rent is also a eligible non-payroll cost, and a covered rent obligation is any rent under a leasing agreement that was enforced before February 15th, 2020. Rent amount is rent or lease payments paid or incurred during the covered period. Also included in non-payroll costs are business utilities. So any covered utility payments that are incurred or paid during the covered period are forgivable. Covered utility payment is payment for services such as distribution of electricity, gas, water, transportation, telephone, or internet access. And again, it needs to be in place before February 15th, 2020. So if you change service providers or you incur a new utility after February 15th, 2020, under the current guidance, that would not be applicable for forgiveness. We've gotten a lot of questions about transportation, and I actually sit in on a weekly Q&A with SBA to try to get clarification on some of these items. And they were unable to provide a lot of clarification on what was meant by transportation. Their recommendation was to discuss it with the bank as they will be making the final determination. We have heard that that gas, so fuel for vehicles, could be included in that transportation. And again, that's something that will be discussed with the bank, and they'll come up with a final determination, or hopefully we'll see additional clarification from the SBA and Treasury. Wanted to run through a quick example on utilities. So borrower's covered period begins on June 1st and ends on July 26th. The borrower pays its May and June electricity bills during the covered period, and then pays the July electricity bill on August 10th, which is the next regular billing date. for loan forgiveness, the May and June electricity bills, because they were paid during the covered period, are eligible. In addition, the borrower may seek loan forgiveness on the portion of the July electricity bill through July 26th. And that's because that was incurred during the forgiveness period and paid during the next billing date. So there are some reductions to loan forgiveness that I wanted to run through. So there's reduction in employee headcount, there's reduction in salary and wages. If you received an EIDL grant, that would also be reduced from your forgiveness. And then noting that 60% of those eligible payroll costs, and there's a reduction for that as well. So let's run through some of the ways that your loan forgiveness could be reduced. So if you have a reduction in your employee calculation, so to determine if a reduction in employee has occurred, the average number of full-time employees per month during the covered or alternate period is divided by the average number of full-time employees during a baseline period. So they have provided 2 baseline periods and you can choose. So we're making the recommendation that you choose the lower of the 2. So the baseline period is either February 15th, 2019 to June 30th, 2019, or it can be January 1st, 2020 to February 29th, 2020. And so we've given a little bit of a calculation of what your eligibility would be for forgiveness if you do have a reduction in employee headcount. But we'll go through some safe harbors that may eliminate this reduction. So one thing that was interesting in the application that was for forgiveness that was released by the SBA in mid-May is that they provided a what is a full-time employee. We were really thinking it was going to be 30 hours. That's often what the IRS uses as a full-time employee. But the SBA came out with 40 hours. So a full-time employee is somebody that works at least 40 hours per week. Borrowers with part-time employees have an option on how they calculate the full-time equivalent. And so you can take the average number of hours worked by the employee per week and divide by 40 and round to the nearest 10th. Or you can take a simplified approach, and if they work less than 40 hours, then they're 0.5 FTE. And if they work 40 hours or more, then they're 0.1. A borrower is exempt from reducing the full-time employee levels if the borrower made a good faith written offer to rehire an employee with the same hours and wage during that covered period or alternate period, and that offer was rejected. One thing that was discussed is that if you do make an offer to an employee, the employee does need to know that that could affect their unemployment, and the borrowers are to contact the EDD to let them know that an offer was made within 30 days. Also, as a safe harbor, if there were employees who during the covered or alternate period were fired for cause, voluntarily resigned or voluntarily requested and received a reduction in their hours, you will want to make sure that that's properly documented. So if you do have an employee leaving during your covered period, that you're documenting that they are actually fired for cause or that they are resigning voluntarily. Per the PPP Flexibility Act, the borrower is not able to rehire employees or hire replacement employees or cannot return to normal business activities because of health and safety restrictions. So that's really interesting that they put that in there, and we will look to see how they implement that, like how that will be documented. But that is a really good safe harbor for a lot of our restaurant clients that really haven't been able to staff up and get fully back due to the continued restrictions for their business operations. The Flexibility Act also pushed out the date for the safe harbor. So if you do have a reduction in full-time employee levels between February 15th and April 26th, but you restore that employee level before December 31st, 2020, that would provide you safe harbor from this reduction as well. So that's moving that out from June 30th to December 31st. If you have significant reductions in salary and wages, so greater than 25%, that will also reduce the amount of forgiveness. And this is only applicable to employees that are making less than $100,000. So if they were making $100,000 and they were reduced down below $75,000 annually, that could reduce your forgiveness as well. This needs to be calculated looking at the covered or alternate period as compared to January 1st, 2020 to March 31st, 2020. A borrower may be exempt from this reduction if they restore the salaries or hourly wages to the pre-pandemic amounts. So under the PPP Flexibility Act, this again was moved out to December 31st, 2020. So if you do increase their salaries to pre-pandemic, before February 15th, 2020, then you would not be subjected to this reduction in forgiveness. EIDL grants, so those grants that were received from the Economic Injury Disaster Loan process, these were grants that were up to $10,000 and in most cases were $1,000 per employee. So this, if you have received those do directly reduce your loan forgiveness amount. And then 60% of the eligible payroll costs. So the PPP Flexibility Act states that the borrower must spend a minimum of 60% of the total loan amount on payroll costs. And so therefore, no more than 40% on qualifying non-payroll costs. If the borrower has less than 60%, the loan amount for loan forgiveness will be eligible for partial forgiveness. However, that will be reduced based on, if you only spent 55% on payroll costs, that would reduce your forgiveness. So just to wrap up, so we do want to make sure that there is time for questions. I'm seeing a lot of questions coming in, and what we've found is that during the Q&A process, that's really valuable for our people joining this webinar to be able to help get their answers to their questions. So I do encourage you to continue to be asking those questions in the Q&A, and we'll have plenty of time to address those. So in conclusion, borrowers must submit the calculation form and PPP Schedule A to their lenders. The borrower must certify that the amounts requested are used to retain employees and pay allowable non-payroll expenses. The application includes a list of required supporting documentation that must be submitted. The lender will have final say and determine actual amount to be forgiven, and any loan amount will be deferred and paid over the remaining loan period at 1% interest. Previous guidance was, again, that the deferral period was 6 months, but the Flexibility Act has moved that deferral period until final loan forgiveness decision. If loan forgiveness is not sought, then payments are deferred for 10 months. In regards to when the application for forgiveness is due, there is no specific due date. It needs to be in before June 30th, 2021. However, we are recommending that as soon as the covered period is completed, that you do get that application in for forgiveness consideration. The bank does have 60 days from the time that you submit your loan forgiveness application to make a final determination. We're imagining that a lot of banks will put this online, so there will be a online forgiveness application pretty similar to the online applications that a lot of the banks had rolled out, probably with a portal to upload all of the documentation, and when those are rolled out by the banks will be determined by the bank. So there may be some lag time between when your covered period ends and when they actually open up the loan forgiveness application at your bank. Do you want to note again that the contents of this presentation were based on current guidance as of June 9th, 2020, and certainly are subject to change as we've seen throughout this whole process. Do want to let you know that we are available to help. So we do have a calculator on our website, and that can be found at wheelercpa.com/PPP. So I would encourage you to sign up for our calculator. We will be updating that calculator based on when the SBA and Treasury release the new guidance on the Flexibility Act. We are also available for consultation. We can complete your loan forgiveness application as well, or we can provide guidance throughout the process and really have some time for planning and making sure that you're maximizing your forgiveness, and we can do that on a weekly basis in our collaboration package. Again, all of this information can be found at wheelercpa.com/PPP. So now we're going to open it up to questions, and looking forward to going through those. Shiloh, you want to go through some of the questions that we've had so far?
Yes, absolutely. We have quite a few, and again,
that's what I would hope for.
Yes, and hopefully I haven't missed any, but as Rick and I were talking, we wanted to remind you that if you do continue to have questions, or if your question isn't answered, you can always contact us directly at the email on this screen, ppp@wheelercpa.com. That will put your question straight to our PPP team at Wheeler. So make a note of that. And I've also shared the link to the slides in the chat. So if you do want to flip back through those slides and look at them, you can do that with that link, but we'll also include it with the replay, which will go up on YouTube. So some of you have been asking questions about slides and YouTube and replay, and I just wanted to answer those up front. As for questions, we received a few questions by email before the webinar, and I wanted to address those first. Nicole asked, the bank confirmed that we were approved for a loan on April 30th, but they mailed the check to the wrong address. We asked them to cut a new check, and it was mailed to our correct address, but we deposited the check on 5/11, and our rent check was sent in before 5/11. So based on all those different dates, can this rent be listed as a covered expense, even though they paid it before they received their loan proceeds?
So I would certainly go back to the bank on that one. The interpretation, what I've seen most people following, is the amount that when the funds were available in their account. So that in that scenario would be May 11th. And if you paid the rent before that, then that would not be in the qualified period. So again, I would clarify with the bank, but more than likely that May rent would not be part of your non-payroll costs eligible for forgiveness.
All right, and then along the same lines, their twice-a-month payroll period begins on May 1st. Since they didn't actually deposit the funds until May 11th, can they still use those funds for their payroll period beginning on May 1st? since the payroll date is May 15th?
So it would be the covered period. So they don't qualify for the alternate payroll covered period because they pay twice a month and not every 2 weeks. So then it would just be whatever is paid in their covered period and whatever's incurred. So if their May 1st payroll goes through May 15th and then it was paid, say, May 20th, that would be included, even though some of it was incurred before their covered period. And then they would also be able to accrue the incurred amounts for the last payroll in their covered period.
All right. Cynthia asked about the deadline to apply for forgiveness, which I believe you addressed. Can you confirm what the deadline to apply for forgiveness is after the 8-week or 24-week period?
Yes, Sandy, do you want to answer that one?
Sure. The deadline to file for forgiveness is June 30, 2021.
And that's for all loan forgiveness applications?
Yes, that is for all loan forgiveness applications, correct.
Good to know.
Yes.
Joseph asked, how do you interpret the full-time equivalent safe harbor for December 31st, or the end of the 24-week period, to return full-time employees to the pre-COVID levels? Asking about a couple different scenarios. He says, do I have to achieve the right headcount during any one pay period on December 31st or during the last pay period of my covered period? And says, thank you so much.
Yes, so we have the safe harbor rule for that. So if you had reduction in full-time employees between February 15th and April 26th, and you've restored your employee level by December 31st, 2020, you want to make sure that level gets back up to the level that you note during the pay period of included in February 15th, 2020.
Okay, so is that true for any pay period within that 24 weeks, or does it have to be at that level at the end of the year specifically?
It does need to be at that level at the end of the year to qualify for that safe harbor, but also keep in mind that there are other safe harbors that are available. So if you've offered employees and they've rejected it, and you have that documentation, or if you have employees that were fired for cause or had left voluntarily, then those are excluded from your FTE calculations as well. So there are some options for safe harbor.
Rajiv had a question that was somewhat related and asked a few, so I'll group those together here. He says, is there a requirement that the employees should have been on the company rolls through all of 2019? Sounds like not necessarily.
Not necessarily. We have the 2 base periods that you're going to be comparing your level for employees. And so one of those base periods that you can choose is for 2019, but if that is not available, you do have a choice to pick a pay period between January 1st, 2020 through February 29th of 2020.
All right. He also asked, vacation pay is incurred every month, but may be paid out only at year end. Would that qualify under the paid and incurred rule?
I believe that would not necessarily, because you need it to be incurred and then eventually paid within the time frame. So if it's paid after the covered period, I believe that's not going to be considered. Is that correct?
So incurred payroll, as I understand it, has to be paid in the normal following pay period.
So it has to be paid in the following pay period. So any vacation time paid in your covered period, or incurred and paid within your next payroll cycle, that would qualify, but not just an accrual for PTO.
Quick question, is it necessary to create a separate bank account where the loan is deposited and expenses paid?
Sam, do you want that one?
Well, I don't think it's a requirement, but we have recommended for some of our clients to do so, just so it's an easier way to track those expenditures.
Yeah, so what we're recommending, and it doesn't have to be a new account. It could be, a savings account that doesn't have a lot of activity. We just don't like to see it mixed with your general checking account. because it just makes it more difficult to track those funds. So it's better if you're tracking those through your covered period and then releasing the funds as you incur the expenses, so that way you know where you are on your loan funds.
All right, Danny asked, if we were to take another SBA loan, separate loan, in addition to the PPP loan that they received, would it affect their forgiveness?
So I think the first thing is to determine what type of loan you received. I think earlier, as Michael had mentioned, if you had an ideal loan, you had the grant, and which was up to $10,000 and it was $1,000 per employee, that amount will reduce the amount of your PPP forgiveness by whatever you did receive. As for other SBA loans, I'm not aware of it affecting forgiveness balance.
All right. Jim asked, please confirm that mortgage interest clause includes loans on business-owned vehicles. Is that something you?
Right. So I think the interest on a vehicle lease is not going to be considered part of the mortgage interest, but what will be considered will be the payment on that vehicle lease, and that'll be for the lease agreement itself, so long as that lease agreement was in place prior to February 15th of 2020.
And if it's a loan on a vehicle, the guidance does say personal property, which would include vehicles. So the interest portion on the vehicle payments, as long as it's in the business, would qualify for non-payroll costs that would be considered for forgiveness.
Oh, thank you for clarifying.
Casey asked, do we need to apply for the extended coverage period to go from 8 to 24 weeks for loans prior to the Flexibility Act?
So we are waiting for guidance from SBA and Treasury on how that's going to be implemented. We've had a lot of questions about, what the details are of the Flexibility Act. And I just have to say that it was like literally one page, and it was just like lined out 8 weeks and changed to 24 weeks. And so it's really up to the SBA and the Treasury on how they're going to implement that. And so pending further guidance, we can't say at this point.
We had a few anonymous questions. Are worker compensation insurance policy payments considered payroll expenses?
Unfortunately, they are not.
And also, does garbage qualify as a utility? This person asked because they have medical garbage as well and are wondering if it would qualify as non-payroll costs.
Yes, as long as that would be considered in utilities, and as long as you had those costs existing prior to February 15th, 2020.
All right. Rose asked, what about if you have less than 40% of non-payroll costs? Will it reduce the forgiveness? And I believe that this is something you covered.
So it does reduce the amount of forgiveness. So if your loan amount was $100,000, then and you only did $50,000 of payroll costs, then the amount that would be considered for forgiveness would be reduced. There's a calculation for that I'm not going to do on the fly, but it would reduce your amount for forgiveness.
The amount you use for payroll costs then has to be at least 60% of what's forgiven, correct?
It has, the amount that's forgiven, exactly.
He also asked, is the submission for a loan forgiveness application time sensitive? Again, we touched on this earlier. But she is wondering, how will we know if there's an updated application for forgiveness?
So there will definitely be an updated form for forgiveness, and we'll be blasting out that information when it's available. We'll also be updating our calculator for that. And then I am positive that the lender will also be updating their applications. And like I said, most banks that we've worked with are doing an online application with a portal. So they would have the application with the most up-to-date guidance as well.
stepped out for just a moment, so I only have part of Dennis's question about paid and incurred. I don't know if Sandy, if you want to open the Q&A, you should be able to see the whole thing.
Sure.
But he's wanting to clarify, and I know, Michael, you and I have talked a lot about this, nailing it down, but he says it sounds like paid and incurred should be paid or incurred. Do you want to speak to that subject about why it's actually both?
Yeah, so if, say on payroll, so in our example, we had used the May 1st to May 15th as their first payroll period in the covered period, but their covered period actually didn't start till May 11. Well, that paid, so you didn't incur for the first 10 days, right? May 1st through May 10th. You didn't incur those in your covered period. However, you paid them in your covered period. So therefore that paid counts even though you didn't actually incur it. But you can also include the incurred amount. So your last payroll period that falls in your covered period, those amounts that are incurred and paid in your next payroll could be included as well. So it is actually paid and or incurred.
All right, I have two questions from Sandy. She says first that she heard PPP loans under 100,000 are automatically considered grants. Is this information correct?
So I am hopeful that they will come to some sort of conclusion that what I had heard was 150,000. So the Banking Association has really been lobbying hard to say that basically all loans that were $150,000 or less should be automatically considered forgiven and save the administrative headache. Obviously, you can tell that there's a lot of details that go into this. The banks are going to have to verify it. So there is going to be some significant administrative time. I am hopeful that they will come out with something that basically says 150,000 or 100,000. These loans are automatically forgiven. However, I'm sure that you're going to need documentation support in case it was ever challenged. However, at this point, under current guidance, there is no threshold that you do need to complete the application for forgiveness to have the loan forgiven.
So the second part of her question is, we expect that our entire PPP will be forgiven based on the amount we received and the fact that it was spent within the 8 weeks, their initial 8-week covered period. Can you clarify what is meant by the statement that EIDL grant received reduces PPP forgiveness? And can you give an example? I think this might be referring to a different kind of grant.
Yeah, so if your loan amount was $100,000 and you have $100,000 of qualified expenses in your covered period, but you received the $10,000 EIDL grant, then only $90,000 of your original $100,000 loan will be forgiven because you received that grant. The remaining $10,000 will be deferred until your final forgiveness application is approved, and then you would pay over the remainder of the loan term, which currently is 2 years and at 1%.
So a related question, anonymous, that relates to EIDL. He says he wants to make sure that they understand correctly. PPP loan forgiveness needs to be applied for, but EIDL advances will be given by default. Any chance for EIDL loans to be forgiven? So is there a clarification you can offer there?
Yeah, so there is no forgiveness for EIDL besides the initial grant. So in the application process for the EIDL, there was a box that you could check to ask for the grant, and it would be up to $10,000, and it was based on employee count, so $1,000 per employee. That's the only portion of EIDL that is forgiven. Everything else, and by the way, EIDL is capped at $150,000 now, and the term is 3.75% for for-profits and 2.75% for nonprofits up to 30 years, but none of it's forgivable. You can have a PPP loan and an EIDL loan. That's totally acceptable.
I have a few quick ones here. Is severance considered payroll cost? From Jason.
Sam, do you want to get that one?
Oh, yes, sorry. It is, sorry, the question was,
severance
yes,
considered payroll cost?
Yes, it is considered payroll cost. That's correct.
And keep in mind that it's subject to the 15,385 in your covered period.
Jose asked, I'm a self-employed Uber driver. What is necessary for forgiveness in this case?
So if he is self-employed, Schedule C, it will be based on 850 seconds. So that's an 8-week period out of 52 weeks of your 2019 line 31 of Schedule C.
Okay. And that is available in the slides, spelled out on one of the slides that you can access from the chat.
Yeah, the
or
details
later.
are in the slides as well, and we will make the slides available after this presentation.
Tom asked, is the max amount you can still use for payroll costs 75% of the loan amount? And the answer there is no, correct? You can use 60% or more on payroll.
It's a minimum of 60% of the loan amount needs to be used for payroll costs. And that was clarified in the Flexibility Act, and then the SBA and Treasury also clarified that it wasn't a cliff, that basically if less than 60%, you still get forgiveness. We have just a few more minutes and probably just too many questions. We will be answering the rest of these afterwards, maybe in the caption of this video when it goes live, but I will try to answer just a few more here. Jim, still on the subject of payroll costs, he says, please confirm what's considered payroll cost. Is it ALI of the employee's gross and none of the employer's tax costs? So all of the employees' gross and none of the employers. So it's gross plus the employer paid state and local taxes.
Okay. And then another anonymous asker. There's some confusion on the 8-week period. Do we have the 8 weeks, the 56 days to spend the funds, or 24 weeks? Or do I have 24 weeks to choose which 8-week period I'm going to use? I think that's probably all of our questions right now.
Right. Well, for that, it was the new borrowers are under the 24 weeks, where the existing.
Well, actually, and this is where we need more guidance from the SBA and Treasury. So the Flexibility Act did remove 8 weeks and move it to 24 weeks. But how that is going to be implemented is up to the Treasury and SBA to determine, and they have not determined it as of yet. My guess is that it's going to be an 8-week period within the 24 weeks. However, we'll have to wait and see.
All right, I think I have to pass it to Rick to close us out, and we will get to the rest of your questions as soon as possible. And you can access all of these resources on our PPP page.
Great. Thank you so much. I think we have an incredibly capable team at Wheeler helping everyone navigate an incredibly complicated process. So thank you for everyone at Wheeler.